let's take a look at what we were referencing. First and foremost, we said that who had it right, the SPY traders, or again, the S&P traders. We came into the day with that little long position, which, as you see, got stopped out. Once again, on TradeStation, your entry on our algo room shows the winners in blue, and it connects the dots from your entry to the exit. And right now, you can clearly see it had exited out of that trade, left profits on the table. But when markets go in a reversal format, one thing for sure, you don't want to take small profits. That's part of the beast of burden, so to speak. But this particular system definitely now is in a reversed short position. And more importantly, as we pointed out yesterday, who has this right? The S&P traders or the volatility traders? You will see our algo system went long right on the open this morning. Here's your current status of that trade on VXXB. On 691 shares, it's up approximately $1,300 for the day. The spider right now short 353 shares and up 656. There's our current performance on this. The day trade model has been taking a lot of 5-minute shorts, a couple little buys, which, as we say in this environment, I'm not a big fan of having the longs on. I'm more impressed with being short. This morning, the 15-minute model, two things happened. On the open, it went short, but had too tight, or the algo had to stop in, and this is what it's programmed. If we go back and look at the 15-minute model, one of the things that you're going to see here, and as I get this into focus, is yesterday we left the day with a long position, and then yes, it exited at the end of the day. Really whopping week for our algo program as far as day trading. But on this short, it didn't generate a new trade on the 15-minute basis, but that doesn't, that's okay. The 5-minute is one that we're kind of trading against at this point in time. So here's the story. Who has it right now? Are we going to see relative reversal in the market, or are we going to see a continuation? And does this trade build into something bigger in the next couple days? For that, let's take a look at my other page. All right, we are right now, if you look at the Russell, so I'm going to bring this into full speed focus for us. We have a breakdown of lower high, lower low in the IWM. Now, I don't know how we're going to close today. It's 119, but one of my famous studies suggested, and it's famous because it's something that was written 18 years ago in my very first book, Candlestick, not this book right here, but the one preceding that. We discovered that generally whatever the trend is was in the stock market between the hours of 10:30 to 12 noon, that trend, not after the first hour, not the first hour, but the next time frame after the first hour, whatever that trend was from 10:30 to 12 noon, that's when the market tended about 78% of the time to continue that trend. So if we had a strong trend going into the lunch hour, after the open, the first hour of trading from 10:30 in the morning to 12 noon, whatever that trend was, it tended to continue into the afternoon. So maybe the general gist is that people think the market in an uptrend day, people feel it can't go any higher, and so they sell, and then the market just feeds on itself. And in the market, when it drives, or has a reversal downside, people feel it can't go any lower. They buy, they place their stops, and on a Friday afternoon, there's no afternoon session anymore. It's Saturday, and you got to get out and pay the piper. So perhaps that might be some of the reasons. Anyway, with that said, the trend today on Friday, that's March 22nd, from 10:30, as you can see, has been lower. So here's the thesis of what we're looking at. Yesterday we came in and we pointed out lots of divergences in the market. We had lower highs in the Russell. The advanced decline was making new lows. The volume made also a signature confirming lower high pattern. So now that the Russell is down below its March swing low, the question begs, how much lower can we get? What's been running the Russell? It was the regional bank, KRE, and now today we have follow-through weakness in pretty much all the sectors. So here's the thesis, ladies and gentlemen. If the Russell is going to be the harbinger, the indicator that kind of leads us lower, so to speak, domestic growth stocks. People don't want to be in growth stocks. They're not that bullish. If the market was very bullish, people would be probably more prone to be in Russell, which is a higher beta trade versus S&P large cap high dividend yielding safe stocks. So here's the thing. If we are to see at least the market catch up, and if the Russell is leading, well, that's going to probably be a little ugly in the sense that if the S&Ps have it in them to continue lower, if they go back, maybe not test their absolute March lows too, maybe they only get back down to the average of those that area, and that would be right around maybe 278 to the monthly pivot. We've got it at 276. That would be a welcomed correction in the market, and it would still present maybe a buying opportunity down there. Today we have the advanced decline is now made it still has a higher high and a higher low zigzag. I don't know how we're going to end the day, but what our biggest wall of worry was the divergence was in the volume indicator. So if the advanced decline rolls over, number one, if the Russell stays down and if we close below two areas that are significantly important. A, if we close back underneath this line or shelf of what was once resistance, if we close back underneath that line in the sand, A, and B, if we close underneath the weekly opening range. And that's the starting point. Let me put up a weekly chart for you right now, and you'll see we have a red candle. What does the red candle signify? It signifies that the current close or the current price is below where the market started or opened. So that's not a warm and fuzzy bullish feeling if we close less than the weekly open, meaning we open higher, we trade higher, and we come all the way back down and we close below the opening range for the week with a decline in the as you can see, the advancers are moving lower. Here's another little tidbit of information, gang. On a weekly chart, look at our advanced decline tool. You will notice that advancers did not support said rally here. And then lastly, let's take a look at my volume indicator. The momentum or the histogram component bars. You can see on each respective rally over the last couple weeks, they've been declining. So we have a higher degree time frame weekly outlook, which suggests that we were warned that this trend was kind of fading. There was some potential divergences between the indices in themselves. The Dow didn't support its rally and didn't make new highs. Only the Qs and the S&Ps, and they didn't stay there. The other divergence was those short-term volume, which I went through yesterday in yesterday's video. And then thirdly was the volatility. The volatility traders got it right. That was where we saw that volume convergence pattern. They were buying into volatility. They weren't selling. So when the stock market made a new high, volatility did not make a new low. So we're in corrective mode here and a welcomed one. So the Fed's out of the way. Maybe people, and this was just what we had yesterday, a very tricky trap. And that's, again, what the market is all about, right? I mean, it tries to fool as many of the people much of the time as much as possible. We had a breakdown, and then we had an upside move. We had follow through because of option quarterly quadruple witching. And then today, again this week, with Fed Chairman Powell saying rates are going to go down. If there's no deal in China, if it still kicks down the can, this leads the market subject to another downdraft. And if we get a downdraft, even if we support lower or higher highs and higher lows, look what that downdraft would represent. Somewhere around, you can see it here, 274 to 276. So today's close, kind of critical. If we close underneath the weekly opening range, So that would leave us where we're at with that candle. And I'm pointing up. I've got all these monitors here. And what we're looking at currently is if we do a breakout, here's one of the positions that we've taken on today is SDS. We're long SDS on a breakout. So when we have the volatility, when the volatility VXXB went and generated a long, and then when we had and there it is, and then we had the reversal in the S&Ps, that's when instead of going long the volatility right now or short SPY, we went just long SDS. Now here's the thing about SDS. I'm going to get into that right now to help us out. SDS. What and how would I be managing this trade? What does it look like as an inverse ETF? And that's what this is against the S&P 500. So a couple things you can see on a weekly basis. We're getting some hints, folks, that SDS, we have a volume convergence, relative strength, which you can't use relative strength of an inverse ETF against the spiders. I guess you could, but it doesn't make sense. So it's not a useful tool. What is a useful tool is the volume pattern. And as you can see, we have a nice little hammer formation kind of forming. So inverse to the S&Ps, they would be forming potentially that shooting star. This would be forming a hammer pattern right here, closing greater than its open range. That in itself is not a buy signal on a weekly basis, but it does, with the volume pattern, significantly improve the outlook that we could get a near-term correction in the market. Incidentally, let's take a gander at the daily charts and see if there's confirming or corroborating evidence of what's happening in the market. Sometimes looking at the regular index might not give us as much information. Sometimes it's also a useful tool to look at the inverse ETFs and see if there's accumulation or technical clues, signs that people are in buying the inverse ETF. And so for this particular setup right now, we have a histogram bar that suggests that, that volume's not really strongly being accumulated in SDS. But we have, as you can see, a what we would consider to be a key reversal equal greater than pattern in the candlesticks, combined with that little blue arrow, which is the person's pivot study, PPS buy sell indicator. So what I think is really critical, having at least some exposure. If by the end of the day, if we close greater than yesterday's high, if we close greater than yesterday's high, I think you want to have exposure to SDS, and you can place a tight stop somewhere under around 33.20, something of that nature. That's about a 70-cent risk on that trade with confirmation, or maybe just wait to see Monday, because after all, if we are to develop a trend, it's probably a 3, 4, 5 day run up. And just like over here where we had a kind of a buy signal, it gapped higher, and you can join that little trend for a quick pop to the upside. That's, I think, when you get into market analytics and you say, is the long-term trend up and is it going to go up forever in equities? Possibly, but are we due for correction? Seasonally speaking, they say in like a lion, out like a lamb. Market's demonstrating right now there is some profit taking going on. Sector analysis, let's get into it briefly and say, how bad is the tape right this second as we are speaking at exactly 1:30? We've just concluded the bottom of the hour in the equity readings from the open outcry session. So we say we just concluded another 60-minute bar. So SDS concluding a 60-minute bar, here it is at 1:30. It's not really doing a whole lot one way or another. So we would want to see if the market maintains structural closes greater at the end of the day than at 33.82. All right, that's number one. Number two, let's take a look at the worst performing sectors. And why is the Russell going down? It's right there, KRE. Boom. Overlay KRE to the Russell, it's almost the same chart. XOP today, oil and gas down 4%, $1.34. Relative to their lows, we're bounced off the lows just a tad. OIH down 4.11%. I'm more prone to be wanting to buy into XOP with over $50, over 55, over almost $60 crude oil than any other oil refiners. I think that the market here, gang, what you want to be focused on is while the indexes can go down, not all stocks and sectors go down. This is the weekly pivot. It's 29.65 as long as that holds. Buying the dip in XOP sector stocks is still a valid idea. Now, as we go down the list here, you will see on this radar screen, now it's looking more like a solid Christmas tree. What is generating brand new sell signals? Dow Jones Industrial Average on the weekly charts would generate at current prices a brand new weekly PPS sell signal. That says that the market could see more consolidation in the next couple weeks. Biotech is another one. IBB. It would form, and I'm just sharing with you on this radar screen, it warns me right now what's happening. This is the person's indicator package on TradeStation. It just puts a lot of the tools and our proprietary indicators all in one place so I can take a quick glance at the market. It's one thing to look at the market if it's up and down. It's another to say what is the relevance of that market's up and down function, right? So right now we are, IBB would be generating a weekly sell signal. How valid do these weekly sell signals, or do the weekly sell signals work? Well, in the past history, in good times and bad, when we've generated sell signals, we've seen some downside action. Sell signal here didn't really generate multiple weeks of downside action, but here's a sell signal that didn't work right over there. Here's a sell signal that did cause multiple weeks of downside. Here's one that did cause multiple weeks of downside, multiple weeks. So generally speaking, it's rare not to see. Here's one that resulted in a reversal, and then 2 weeks later, bang, right back to the downtrend. So if you noticed and worked with me on those and followed me with those weekly sell signals, at least how it relates to biotech, more times than not, they work. We respect them. And you're starting to see more and more weekly new fresh sell signals. What about buy signals? What's going on here? We've got buy signals on a weekly basis going in, or possibly could reverse, and the threshold has just been dissipated. In other words, it was probably at 22.70, closer to the high today, around 80.86, would generate a new fresh buy signal in gold, the GDX. OIH, it was flashing, it was generating a buy. OIH is dissipated, it's already off, and that's where we have to look at those and those refresh. Bond TLT, whoa, something magical there. That is one that broke out of a sideways range, and this is one that we were expecting the market to go flat, sideways, and so it is in a breakout mode right now on stronger volume. So that's one, just to be quite frank, everyone, if bonds go up, they're buying bonds, they're buying volatility, what would they be doing with equities then? So it might open the door for lower prices, and I think that the board, rather than come up with an opinion because I think the market can't go any higher, or come up with some kind of opinion, this tells me where the money flow really is going. So right now we have a lot more new, fresh weekly sell signals being generated. Let's go down and take a quick scope of the market here. Is this sell-off on strong volume? So first and foremost, let's take a look. Our average volume move for the regional banks, 7 million shares on average over the last month. Today, it's 17 million. This is not an accumulation. Is this a distribution? Is this capitulation? To be honest with you, the relative strength has been bad, and this seems to be pretty strong sell-off in the marketplace. It could be a little capitulation. It came all the way back down to an area of 48, where it was visited at the beginning of 2019. It certainly does not tell me to be buying this dip today. Rest of sectors here, it's again, we've got another 3 hours left, to 2.5 hours, excuse me, of the day. And as you notice, XOP, that's a big sell-off in volume already. We've exceeded the 10, 15-day average volume. The rest of the scope, Russell, same thing, 23 million. So yes, everything is being sold off. Here's one that's a big shock is the financials. Again, it's weighted with, again, small banks, large banks, and again, institution and asset managers and American Express credit cards. The entire financial down. Financials, transportation. Let's get to IYT real quick, if I may share this with you. And I just want you to see with your own eyes what is the tape and what is not just the up and the down movement, but what is the condition of each respected move. IYT is the transportation ETF. Let me go, and here it is. IYT, well, it's already doubled its volume. It's not a really active 257,000 as its average 10-day volume, and we're at 581,000, double. So we've already been in a weekly sell. Transports aren't performing. So you got transports against you, financials against you. The only thing that was moving up this week, again, at one point was oil, and they just ripped that away from us. And then lastly, semiconductors. How bad are semis right now? Well, SMH does 5.8 million shares on average, and today alone it's at 5.4. So it hasn't really caught up, but here's my take on semis. A garden variety pullback or divergence. And here is the SMH. Yesterday we gave our outlook for Intel, and today it's falling down. The relative strength PMC indicator is weakened. We have a secondary higher high. Divergences don't happen at every top. They happen at kind of important tops. This is a daily chart, which would suggest that if we follow through in the next couple days, and my guess is if we close below that swing high, again, what was once resistance turns into support. If it closes below that line in the sand, I think we have to respect maybe one more downside route before it's all said and done. And that's, my friend, what would take, I think, a lot of people by surprise in the marketplace. So the tape, not great. Looking at this board, lots of negativity, relative strengths in the material. Everything you see on this RS, which is the relative strength, shows it's weakened against the overall market. Not a lot of really strong stuff. Some of the energy is still good. Don't get me wrong. Some of the energy stuff is good. So we want to focus in on that. You want to stay away from buying stuff that has extreme negative relative strength. Wells Fargo does not have as extreme negative relative strength, and that's the one we're thinking of looking at buying and adding to on a dip down here in Wells Fargo. So we'll see if we're right on that one. The regional banks certainly, look at these readings, negative 14. I want to avoid these for right now. That's it. Broker dealers, avoid those for right now. Credit cards. You know, ironically, MasterCard still has its bright blue on its relative strength rating, which means it's outperforming the market. It's strong relative to the rest of the market. So if things turn around, you want to buy, when the market goes down, you want to buy the stronger stocks in the group. That's the mantra amongst institutions. In the technology, there's your strength. It's Apple. Down 1% today, but look at the relative strength, bright blue. Those are the ones that when this equity pullback is over, we want exposure to the bright blue stuff or the stronger stuff. Consumer staples today, a lot of this stuff is stronger. In fact, that's what's positive today, which is the real bizarre thing. Your Clorox, your consumer staple ETF XLP, Coca-Cola. So that's a defensive play. In consumer discretionary, lots of red there, but you know, it's not that bad. Look at Best Buy. It's only down 10 cents on the day. How bad can it be if Best Buy's down 10 cents on the day? All right, retail, lots of red there. There's a lot to cover here as we get into the next few days. And then lastly, when I say the next few days, Monday, Tuesday, we'll update you on the performance of how things are shaping up. Defensive, utilities, again, man, they're off to the races. Healthcare weakening, biotech, all red everywhere. And, you know, and I'm not really just looking at this net change, it's again the relative strength. Relative strength is really going to help us to gear towards what we should be focusing in when this market bottom or this pullback ends. With that said, right now, I hope you understand that we are at the cusp of a rollover in the market. This could be a bigger pullback than everyone suspects. The market had a quarterly witching squeeze to the short side. And now we're starting to see potential rollover and weakness in that, not just the advanced decline, but it was a light volume rally. At the end of today, guys, and I don't know where we're going to be. We'll update you later, but right now let's review. The Russell's in a PPS daily sell. The NASDAQ Composite daily sell with advanced decline divergence. We have the NYSE really breaking down its advanced decline. A real negative breadth day today, already in a sell mode. The Dow Jones in a sell mode with, again, another divergence pattern. And then today, we leave the S&Ps in a sell mode. The only thing that's not in a sell mode is right there, is the Qs. So, 5 out of 6 are not looking good. And if things continue into the close today, this could mean something. Watch your SDS. Could be a great little setup for you guys to take advantage of a short-term pullback in the market. Thanks for watching, and I hope you found value in this. And if you did, do me a favor. Give me a thumbs up. Let me know if I should be helping you. And then leave a comment. John, show us some more about what your scan results are, for example, or what sector could we look at? If the S&Ps go down, should we be looking at trading more volatility, or should we be looking like the ETF inverse SDS? If we start to see a market turn around in the Russell, maybe what would you recommend? Let me know what you're feeling and what you want me to cover. Put that in the comment box. Thanks, everybody. Have a great weekend.